A former Tesla bull turns bullish again. Let's take a look.
Well, folks, for the first time in years, this man right here just bought Tesla stock. Yes, for the first time in years. And what I want to take you through in this video is why I bought shares here today. Why not wait 2 weeks, 2 months, 2 years to buy Tesla stock?
Well, for me, I don't need to have Tesla stock and rest to know that it looks good. I don't know how I know it, but I just know it.
It's the definition of catching a falling knife. If you ever heard that expression before, it's when you buy a stock that is literally in such an epic downtrend that people are like, why even try to step in and catch that baby, okay? And I mean, if we look at this stock, guys, let's be quite clear. The stock price is down 57% in the past 3 flip and flapjacking months, okay?
You know, I just keep dollar cost averaging. I don't know. Maybe it's because I'm jealous. Maybe it's because I think someone else may come and take Tesla stock away at these prices. I don't want to risk it. And how do you catch a falling knife? Without dying. Meaning, I'm not using any margin borrowing.
I don't ever look at it as like catching a falling knife. Like, I acknowledge it, I understand it, right? I understand that I'm catching a falling knife.
Okay, I just need to clear a few things up. How do you call this a falling knife? I mean, wouldn't you want this so-called knife to fall onto you?
But at the end of the day, I am a fundamentals-based investor, not a trader, right? And so a trader might look at this and they say, no, I can't touch this thing, right?
I think what he is saying is, don't be a playboy. Be a man.
You're trying to get like kind of the perfect entry and exit and those sorts of things.
There is no comment I can make that I can think of that would not get me canceled, so no comment here.
Spent $77,000 in Meta stock in a very short amount of time, right? When I posted that video, it was Halloween, it was October 31st, and it was real scary times for Meta nonetheless, right? And when in regards to Meta, did I get the bottom? No, I didn't. Actually, I could have bought that stock for even cheaper, literally just a few days later, essentially. Literally a few days later, it was cheaper than where I bought, essentially, right? But obviously, the stock's gone up considerably since October 31st, like 26%, right? At the end of the day, I'm never going to get the pricing perfect on the upside or the downside. When I'm buying or selling, I acknowledge that, and I'm understanding of that. I just understand that, right?
Yep, eventually. Actively managed US equity funds just underperform. 99% of them do. So you can have a few good years, but eventually it catches up, at least with 99% of them. So not all, but almost all.
Also, everybody's freaking out over EPS growth, right? Because they had 200% plus EPS growth, let's say roughly 83% or 100% revenue or EPS growth, something around there, right? To then maybe 34% EPS growth to maybe 22%. And so this is very concerning to a lot of analysts or investors of like the deceleration.
Well, this right here, I believe, is quite juicy. Stephen Mark Ryan is saying, in my opinion, Tesla has gone full 2000.com bubble crash where Amazon dropped more than, 95%, something like that? Except there was no bubble. Someone remind me of this tweet in a few years and in a decade. Well, short term, I expect more buying opportunities, but long term, to me at least, Tesla stock looks very good. Not financial advice, of course. And also not dating advice. Definitely not.
Right? And so that's something a lot of people consider there. But here's kind of the way I look at this, right? The company is trading for actually less than a $400 billion market cap today. But let's say it's around $400 billion, right? So this is a company that as of, let's assume they disappoint huge in 23. Let's assume the economy is really bad and auto sales, let's say, go down. It's just a bad year, right? So let's say they only do $100 billion of revenue instead of $114 billion. That's a $14 billion plus miss. That would be awful, okay? So let's assume that happens. I'd rather assume some pretty bad scenarios, right? And let's assume in 2024, instead of doing $143 billion, let's assume 2024 is weak as well. And so they do $125 billion, okay? So Basically, we can also assume on net income side, let's assume they don't grow net income. Let's say Cybertruck, in terms of trying to ramp that product, let's say it's super costly. Let's say Tesla has to, basically cut pricing on vehicles, do extra incentives that hurt margins, hurt profitability of the cars, and simultaneously, let's say they don't find any major cost savings over this next year, okay? That's assuming a lot of bad stuff, but let's just assume it all, okay? So they do roughly the same net income number as they're going to do roughly in 2022, right? So if they do $14 billion in 2023, I'm paying 35 times 2023 numbers, and that's if there's no growth in net income. In my opinion, that's a pretty good deal considering Tesla's long-term runway for net income growth and revenue growth. And that the fact that this company is still very early stage.
I know we are not supposed to talk about age, but who can stay attractive longer? It's a factor. Tesla is young. Tesla is expected to produce a lot of cars over the years. It's not slowing down. It doesn't seem so. And clearly, you can be attractive almost at any age. The question is, how long will you still be attractive to most investors?
Now, let's say they're a year behind on their net income, right? So let's say they do $19 billion in 2024. All right. So I'm basically paying 21 times 2024 numbers for this company if they're a year behind in net income, right? Which is pretty much a disaster. Let's be clear. I mean, that's a $5 billion plus miss. Basically what analysts have on average versus what we could assume the company does in a bad economy, right? Those aren't rich numbers at all. Especially for a stock with Tesla's type of opportunity and type of growth for the future years, like, come on, man, that's not bad at all.
Tesla's opportunities look curvy to me.
This is where the risk reward gets very, very attractive in regards to Tesla, right?
If after hearing that, you want to escort yourself to margin borrowing, I don't blame you, but I certainly don't recommend it. I have heard that it can be dangerous, and even if you use, if you're careful and if you protect yourself, I have heard bad things can still happen. So I'm not going to judge you, but just be careful.
Now, we could assume, like, let's say, basically I kind of, took a look back at auto sales over time, right? And obviously 08, 09, auto sales really felt bad. So let's say 2023 is a bad year for auto sales. Let's say 2024 gets even worse. Now, Tesla should be able to grow regardless. The question is what rate of growth they're going to have if the auto market just goes down for the next, let's say, 1 to 2 years, which is a realistic possibility, which would mean then 2025 and 2026 would see a reacceleration of growth. Okay, so do keep that in your mind as well, because I think that's very important. It's, unless you think the whole next 10 years is going to be awful and auto sales are going to go down for 10 years and do something we've never seen before, that's always a potential, but it's not very realistic. If anything, auto sales can maybe go down for a couple of years, 3 years, something like that. We've already had several years of down, right? And I wouldn't be surprised at all, once again, if 2023 is a down year for autos, given the state of the economy. Now, let's assume the economy doesn't fall off a cliff. Let's say things are okay, right? Which is a potential. I think the economy is in a lot of trouble over this next, 12 to 18 months. But let's assume the economy is okay. Let's say the Fed changes course at, the middle of 2023 before the economy really falls off a cliff, right? Let's assume inflation comes down to the Fed's targets of 2 to 3%, somewhere in there, right? And let's assume we get the soft landing that everybody's hoping for, which I think, once again, is very far-fetched, but let's assume we get that. And so they do these sorts of numbers, right? And let's say these numbers hold up that analysts have. Well, in that sort of scenario, I'm paying 21 times 2023 numbers for Tesla, and I'm paying 16 times 2024. For a company with Tesla's growth over the next decade, that's ridiculously low. There's no way that should be that low, just to be quite frank. And so the pricing is unbelievably attractive in that sort of situation. It's silly. For a major growth stock like Tesla, which is a major growth stock, that's silly.
I know a lot of people are waiting for Tesla stock to go down even lower, and we're trying to bargain with Tesla stock. We're waiting for Tesla stock to get really dirty. Why do I not do that? I'm a gentleman.